Hello.
What's up in the FX market?
Well, the euro is moving in an upwards trajectory. The British pound is moving in a sideways fashion. The Aussie is moving up in today's trading session. And the dollar against the yen has remained neutral. Now, the dollar against the yen remaining neutral may be due to the finance minister's comments yesterday, implying that the government may intervene in the FX market should the FX levels remain this volatile, potentially providing some support for the Japanese yen. The dollar against the Turkish lira is moving up again. It's at new all-time highs. It's nearing the $26 mark, which is unsurprising, as we had stated over and over again. It appears that the economic policies, or well, the finance minister and the central bank head that President Erdogan has placed in the government appear to be insufficient, I would say, to present to the market that they're going to be moving back to orthodox economic policy, and as such, it's moving in upwards fashion, and the dollar against the CAD is moving in a downwards fashion. So we're seeing a general dollar weakness across the board in the FX market, I would say.
And how has gold's price been reacting?
Gold's price has been slightly up today, but in the grander scheme of things, it's moving in a downwards fashion. Yet, given that there are recession worries, the descent is not as fast and appears to have found some support and maybe moving slowly in a downwards fashion, not in a rapid motion.
And how about your stock markets?
Well, all three major indices are up, but just barely. So I think the reason as to why they're up is due to the weakening of the dollar, which has allowed for investors to buy your stocks at a cheaper price. And we note that Tesla was downgraded yesterday by Goldman Sachs. So from a buy option, it went to a neutral option, which did result actually in about approximately 4% in Tesla stock moving lower. We also know that IBM acquired software company Aptio for about $4 billion US, highlighting again the demand for cloud services and AI.
And how about oil prices?
Oil prices are up today. There's a theory that OPEC is trying to bring into the fold Guyana into joining the group. Hence, if they do join, there may be a greater consolidation of power across the world's oil-producing countries. Hence, they might be able to reduce supply even more, which may in turn push prices up. Yet we should note that there have been reports that they have said that they are not willing to join. So contradicting reports, but overall the market is moving in an upwards fashion.
And what's in today's calendar?
Well, in today's calendar, we note the Norges Bank governor who is due to speak, Canada's CPI rates, which are anticipated to weaken the loonie, the US consumer confidence figure, the new home sales figure as well, and the US Richmond Fed Composite Index in the US.
Great. Thank you, Fedor, for your time, and everyone for watching. Join us after a short break for technical analysis.
Hello, and welcome to today's technical analysis. So starting off with gold, as you can see, gold has bounced off S1 at 1,910. It is now in the mid-range of the Bollinger Bands, having broken above, yet the RSI is still near 50, which implies a sideways motion between S1 and R1. However, well, yes, sideways, as the upper bound of the Bollinger Channel is also moving lower, coinciding with R1. Downwards moving trend line, which we're going to extend. So we maintain a neutral outlook for gold currently, as it's staying between S1 and R1. It's in the mid-range of the Bollinger Bands, and as they've narrowed, it implies low market volatility within the market. Now, the Euro USD, so the common currency against the greenback, it had broken below our upwards moving trend line, moved lower, tested this one on 1.8450, moved higher, tried breaking R1. On the third time, it managed to break above. Small correction, then moved higher. So we're maintaining a bullish outlook for the pair. So this is S1. This becomes S2, and this becomes S3. So we could even see the formation of another upwards moving trend line. We could even perhaps see an upwards moving channel. Slightly narrow as well. But I would have to wait and see. Failing to break and then moving higher. But overall, from a technical analysis perspective, it's a bullish sign as it's broken above the RSI figure of 50, implying a bullish market sentiment. So this is S1, S2, and S3. And we're going to be placing resistance. So my resistance line would be brought at around here. Now, as you can see, the candles. So the bodies of the candles, my own personal preference, found resistance here, touched by the wick, validating this as a prior support, then again as a resistance level. Let's see the distance between R2 and R3. Maybe valid, but is still slightly too close for comfort. So you can see on the daily as well, we're seeing an upwards moving channel. This needs to be changed. This is too close. So we're going to be bringing R3 higher using the blocks. We're going to be seeing that in the future as well. Bodies validating once again. I just need to check resistance at R3. We need to validate that at some point R3 was indeed validated. So as you can see, moved around R3, validated as support, then as resistance. So R3 is at here is valid. So R3 is at 1.0815. R2 is at 1. Excuse me, there was 1.10815, 1.1024, 325. Let's just make these round even numbers. So as we're seeing the pair moving in an upwards fashion, we're maintaining a bullish outlook. The two touches are not enough. So we're maintaining a bullish outlook for the pair, given that it's broken above the RSI figure of 50, implying a bullish market sentiment, formation of upwards moving trend line, perhaps even an upwards moving channel. Yet this has yet to be seen. So the pound against the dollar, so cable, it's broken above our upwards moving trend line. Yet the Bollinger Bands have narrowed, implying low market volatility, and they're moving in a downwards fashion. So we could even say that there might be a downwards moving channel. So let's see if this can be validated. So if there was going to be a downwards moving channel, this would be it for me. Moving lower. Small correction here. but as you can see, it was validated by other bearish and bullish candles. So if it fails to break above, I expect the pair to move in a downwards fashion. However, one could even say that support is at around this level, at 1.269, and then bringing S2 higher. One to 1.2595. And then S3 at 1.2485. So we've brought support at S1, and we could even bring resistance lower to 1.2775. And then I would need to bring R2 and R3 down as well. Just see, let's measure the difference between R1 and R2. We're looking for bodies, turning points. Okay, 70 pips. It's all right. 96. Coinciding with the peak. So for the pair, we could even maintain a neutral outlook. So it might be moving in a downwards fashion. Yet the narrowing of the Bollinger Bands and the fluctuation around the 50 RSI level could mean that this might move in a sideways fashion, having broken above the downwards moving trend line. Yet we note that there is a formation of a downwards moving channel. So contradicting information. Personally, I would maintain a sideways bias for the pair. Yet should it fail to break above the downwards moving channel, then it would continue moving in a downwards fashion. So let's just fix R3. Dollar against the yen. So on the daily, you can see that the greenback is strengthening against the Japanese yen, finding support at resistance, at 143.85. On the 4-hour chart, you can see this being validated again. Look how neatly it was touched. So we're still maintaining our bullish outlook for the pair, running along the figure of 70, implying a bullish market sentiment. Yet we should note that following yesterday's comments by the Japanese finance minister, this does have the potential to turn around. So should the government intervene in the FX market, so strengthening their own currency, I would not be surprised if it breaks below the upward moving trend line and breaks below S1 as well. However, based on a purely technical analysis, it appears to be moving in an upwards fashion, which is currently testing resistance at R1 at 143.85. However, on a fundamental basis, I do expect the Japanese yen to strengthen. Yet for now, we maintain a bullish outlook. So the Aussie against the dollar, you can see that the Aussie has weakened against the US dollar. It's found some support at 0.6666, which had placed previously. However, it's still moving in a downwards fashion, validating our downwards moving trend line, as you can see. So we're maintaining a bearish outlook for the pair. In addition to the RSI figure below our 4-hour chart, showing a reading below 50. It bounced off 50 at here. So right where it touched our downwards moving trend line, the RSI figure rejected the 50 level and is moving towards 30, implying a bearish market sentiment. In addition, this may be a consolidation of orders before moving lower. So we're maintaining a bearish outlook for the pair, dollar CAD. Despite breaking above our downwards moving trend line, it appears to be in a downwards fashion as it slightly broke below S1. RSI figure might be going back up to 50. So maybe a sideways movement between S1 and R1. Yet, and the narrowing of the Bollinger Bands could be implying that it's moving in a sideways fashion due to low market volatility. On the daily, the floor came higher. Not be surprised if it comes right around here and then moves lower. Moving higher on the 1 hour chart. The daily RSI is at 30, so implying a bearish market sentiment. Might be moving to 50, so I'm expecting this to be a temporary market correction before moving lower. Note our support and resistance levels. So predominantly our support levels broke below S1, came back up, took out sell stops. Took out some short orders as well, moved lower. Wicks touching S2 at 33,620. And there is a formation of a downwards moving channel. So we're maintaining a bearish outlook for the Dow Jones 30. Formation of a downwards moving channel. RSI moving towards 30 implies a bearish market sentiment. So S1 at 33,960 is now R1. So it switched. S1 becomes R1. Previous R1 becomes R2. And then we're going to be bringing R3 much lower. And R3 could be at 34,510. 1,510. So S2 becomes S1. S3 becomes S2. Yeah, we could even bring S2 higher. I'm looking for turning points in the chart. Found support, broke below, turned resistance, broke above, now turned support. So this is how I'm trying to find my support and resistance levels. So this is S2. This is S3. 32,830. when we're looking at oil. Now, with OPEC trying to bring in more nations into the fold in order to control the oil supply, was moving in an upwards fashion. Seems to have rejected the 50 and is now moving lower. It's broken below S1 at 69.40. Yet could bring S1 at 68.77. Bring S2 slightly lower. See 67.38. So if they do join OPEC plus, OPEC, sorry, not OPEC, OPEC plus, we may see gold, oil moving higher as they can control the world's oil supply at a greater extent. Yet, following news reports that they may not be that inclined to join, we might see oil moving in a downwards fashion. So perhaps temporary support moved higher to the mid-range of the Bollinger Bands for a small market correction and is now moving once again lower. So the Turkish lira. Not enough has been done to convince the markets that they're going to be returning to economic orthodox policies. So as you can see, it touched beautifully on the 25.50 R3 mark. So this becomes support. R2 24.50 becomes support. And then we keep S3 as is. So R2 becomes S2. R3 becomes S1. And S1 or previous S1 becomes S3. So now how do we decide where we're going to be placing R1, R2, and R3? We're going to be reflecting the bullish candle higher. 8797. $26.88. So this would be the next resistance line. Then I would bring R2 at 67.50. Excuse me, 27.50. Just too close, so we might go to 28. And then 29 for R3. Big figures. Psychological barriers as well. The $9 mark, 28, and then the 26.88 is a reflection of the bullish candle here. So R1 will now be 26.88. R2 will be the $28 big figure. And then R3 will be the $29 big figure. Key psychological level close to 30, expecting major resistance at the $29 mark. So it's moving in an upwards fashion. You could even put an upwards trend line, but as I've constantly said, there's no point, in my opinion, because look, touching the wick, not significant enough. Perhaps this could be the formation of an upwards moving trend line, yet the pair is extremely volatile. Look, it's still way above the figure of 70. Very strong bullish market sentiment. So this could easily swing in either direction if they announce surprise. And when I say surprise, I mean but perhaps 700 basis points, an interest rate hike. Yet it appears that they will not be doing such a thing. So we're expecting the pair to move in an upwards fashion, continuing its upward momentum, breaking R1 and R2. And we're going to be checking Airbus. So note how we noted this decline, corrected slightly, moving higher, but I would anticipate the stock to move downwards, breaking once again the S1 at 127, moving towards S2. And lastly, Intel. Maybe a small market correction, but let's just place our support and resistance levels. 31.97. This becomes R1. R2 and R3. R2 at 36.15. R3 at 37.60. $31.97. And then S2 at 29.70. I'm taking this turning point here as it touches twice. It's validated again and again by large bullish candles that there is a significant amount of buying pressure at this point, rather than just looking at the predominantly the substance of the candles, so the open and close, rather than the wicks. And then S3, I would personally bring around here. That's slightly too close. 27.10 would be S3. $37.60 becomes R3. So 29.67. And for Intel, it's running along the figure of 50, so might be neutral, high market volatility, yet failed to break above the mean region of the Bollinger Bands. So maintaining a bearish outlook for the stock, despite it actually being up on the daily for 3 consecutive days. I think this is a small market correction before moving lower. So that does it for today. Thank you, and until next time.
everyone, my name is Emily and welcome to another of our great educational trading videos. Today we're going to look at day trading. Day trading is a very popular short-term trading strategy that involves the buying and selling of financial instruments during the trading day in order to make a profit from small price movements. The most important rule of day trading is that traders need to close out all their positions at the end of the trading day. Generally, the day trader aims to take small profits that can add up during the day or trading period, while at the same time minimizing their losses. While day trading is a viable trading strategy for many experienced forex traders, beginner traders could find day trading to be challenging. Without a well-defined trading plan and the discipline to adhere to its rules, beginners might be overwhelmed by the stress of intraday trading. Day trading strategies can differ from longer-term trading strategies as they focus more on profiting from shorter-term movements in the market compared to moves that take place over a number of days or weeks. In this respect, day traders need to be continuously focused as markets can move suddenly in the short term. Overall, advantages of day trading include instant results and no overnight risk. On the other hand, the disadvantages include requiring a high initial deposit to make substantial profits, less time to think, and there is also a risk of overtrading. Thank you so much for watching us today, guys. Bye-bye.
For today's webinar, we're going to be talking about backtesting your strategy on MT4 and MT5. So if you have any questions throughout the webinar, feel free to let me know in the chat and I will answer them as soon as I can. And we should be able to get through the slides pretty quickly. So we might have time at the end for some setups or looking at some live analysis. So feel free to let me know in the chat if there are any specific currencies or commodities that you'd like me to go through. And yeah, once I'm done with the slides, I'll be sure to go through those. Okay, so as per usual, before we get started, just a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, let's get started. So I'm Melanie. I'm from the company Everest Fortune Group, who were finalists for Best FX Research and Best Equity Research in the years 2019, 2020, and 2021. Okay, without further ado, here's our agenda for today. So we're just going to do a really brief introduction to MT4 and MT5 in case you are not familiar with them. And then we're going to do a comparison and then some tips for trading on MT4 and 5. And we're going to deep dive into backtesting. Okay, so MT4, short for MetaTrader 4, is a widely used trading platform that is highly recommended for beginner traders. So here we have a screenshot of just the the layout of MT4. So we have all of the charts laid out nicely, and you can minimize them as and when you wish. There are a few differences between this and MT5. I'll show you in a little bit. Let's get into some characteristics of MT4 first. So just a brief intro to MT4. Firstly, the access to multiple markets. MT4 provides access to various financial markets, including forex, currencies, stocks, commodities, and indices. This allows you to trade different instruments within a single platform. Number 2, MT4 is really easy to install on your computer or mobile device, and most brokers offer MT4 as their primary trading platform and provide step-by-step instructions to set it up. Once installed, you can quickly create a trading account and begin trading. So MT4 also features an intuitive and user-friendly interface. The platform offers customizable charts, real-time codes, and a variety of technical indicators and drawing tools to help you analyze the markets effectively. Next, MT4 also provides a wide range of analytical tools. So these include built-in technical indicators, such as your moving averages, your MACD, RSI, so on and so forth, charting capabilities, and the ability to create custom indicators. So these tools can help you in identifying trends, patterns, and potential entry and exit points. So one of the key features of MT4 is the ability to use EAs. So EAs are automated trading systems that can execute trades on your behalf based on predefined trading strategies. So MT4 allows you to develop your own EAs or use the existing ones from the community. Next, backtesting. So MT4 also enables you to backtest and optimize your trading strategies using historical data. So you can test your strategies against past market conditions to evaluate their performance and make the necessary adjustments. Mobile trading. So both MT4 and MT5 offer a mobile version for both iOS and Android. So you can monitor the markets and manage your trades on the go. And lastly, community and support. So MT4 has a large and active trading community. So on there, you can find online forums, tutorials, and educational resources dedicated to MT4. And you can learn from experienced traders and share your own knowledge as well. Additionally, most brokers offer customer support to assist you with any platform-related queries. Okay, next, let's take a look at MT5. So for MT5, here is the interface for MT5. You can see it's pretty similar, but there are just a couple of differences that we'll mention in a bit. So here are the characteristics of MT5. You can see there are a couple of similarities, but MT5 offers even more, or rather a wider diversity of financial markets. So this actually includes cryptocurrencies, which MT4 does not offer. So this allows you to diversify your trading portfolio and explore different market opportunities all within a single platform. Of course, they also offer stocks as well, forex currencies, commodities, futures as well. So next we have the user-friendly interface. We mentioned this earlier, so I'm just going to skim past it. And next we have the enhanced timeframes. So MT5 expands on the timeframes available in MT4. It offers 24 different timeframes for chart analysis. So this allows you to analyze price movements in greater detail and find trading opportunities that suit your preferred time horizon. Next, netting and hedging systems. So MT5 offers both these systems, providing flexibility in trade management. So if you're asking what exactly are these, so firstly, the netting system allows you to have only one open position per trading instrument. The hedging system enables you to open multiple positions, including opposite directions, for the same trading instrument. Okay, MT5 includes a depth of market feature, also known as level 2 data. So it provides you with information about the current bid and ask prices, as well as the available liquidity at different price levels. So this feature allows for better understanding of market depth and can assist in making more informed trading decisions. Economic calendar. So MT5 also incorporates an integrated economic calendar, providing you with important economic events, news releases, and their potential impact on the financial markets. So this feature helps you stay informed about key market moving events and adapt your trading strategies accordingly. Number 7. So MT5 offers advanced backtesting and optimization capabilities, allowing you to test and fine-tune your trading strategies using historical data. So similar to MT4, you can assess the performance of your strategies under various market conditions and optimize them to improve their effectiveness. So I mentioned earlier that both MT4 and MT5 are available as a mobile version as well. Okay. Lastly, community and support. This is pretty self-explanatory, so I'm gonna skip that as well. So MT5 offers more advanced features, so it's important for beginners to educate themselves about trading concepts, risk management, and develop a trading plan. And it's more for a MT5 is more for a comprehensive trading experience, since it has all of the features required all in one app. Okay. I've briefly touched on some of these, so I'm just gonna skim through these as well. So there are a couple of similarities that I mentioned earlier, and a couple of key differences that we want to point out. So firstly is the programming language. So MT4 uses MQL4, which is MetaCode's language 4, whereas MT5 uses MQL5. Now, MQL5 is an enhanced and more versatile programming language compared to MQL4. So this offers more advanced features and capabilities for developing custom indicators, EAs, and scripts, if that is something that you are looking at. Next, we have market coverage. So we mentioned this earlier, but MT4 primarily focuses on Forex trading, whereas MT5 offers a wider range of instruments, including stocks, futures, options, and crypto. So MT5 provides traders with access to multiple financial markets within a single platform, whereas MT4 is a little bit more limited in its market coverage. Okay, next we have timeframes. So we mentioned this earlier as well, but MT4 only offers 9 standard timeframes, which could be enough for you depending on your trading strategy. But if you prefer looking at a wider number of timeframes, then you could look at MT5 since it expands this to 21 timeframes, providing more flexibility and granularity for traders. Hedging. So MT4 supports hedging, which means that traders can hold multiple positions of the same symbol in opposite directions. So it allows you to open both long and short positions simultaneously for the same currency. Whereas MT5, it eliminates hedging and adopts a netting system, where only one position per symbol is allowed, and each subsequent trade closes or modifies the existing position. Next, we have depth of market. So MT5 includes the DOM feature, also known as level 2 data. So it provides traders with information about the current bid and ask prices, as well as liquidity that's available at the different price levels. However, this feature is not available in MT4. As for our economic calendar, This feature is not present in MT4, but it is present in MT5 because it incorporates an integrated economic calendar. So it also tells you how prices will be affected based on the different news releases or economic events. However, even though MT4 doesn't include this, but there are many websites that you could use to strengthen your fundamental analysis as well. So one that we are really fond of using is the forexfactory.com, because you can adjust the weeks that you're looking at, weeks or days that you're looking at, and it will tell you all of the important events. It will even indicate the significance of these events as well. So not too much of a problem if you don't have the economic calendar integrated into MT4. It's just more for ease and convenience. Okay, next is backtesting and optimization. So MT5 offers improved backtesting and optimization capabilities compared to MT4. So it allows traders to perform more accurate and detailed historical testing of trading strategies and optimize them based on various parameters. Lastly is the user interface. MT5 has a more modern and user-friendly interface compared to MT4. It provides enhanced charting tools, more customization options, and a more intuitive overall experience. So while it's important to note that these are the differences, but both platforms are widely used and supported by different brokers and offer a wide range of features and tools for traders. So the choice between MT4 and MT5, it really ultimately depends on your specific requirements or trading style, as well as the markets that you wish to trade in. Okay, this is just a summary of everything that I've mentioned earlier. Yeah, I've mentioned everything, I think. Let me just see if there's anything else. So MT5, because it uses a different programming, it's also slightly faster, 64 bits, and it's multi-threaded as well, compared to MT4. But if that's not an issue for you, then MT4 is good enough. Okay, yeah, let's move on. Tradable instruments. So these are the tradable instruments that are available on MT4 and MT5. Okay, but this list is not exactly completely accurate because it really depends on the broker that you are opening a trading account with. Okay, the only exception is that you can trade crypto on MT5 only. Okay, timeframes, we mentioned this earlier, but how exactly you can determine whether 9 timeframes or 21 timeframes, which is better for your trading strategy. 9 timeframes should be enough for swing and long-term traders, whereas 21 timeframes just gives traders an advantage for deeper analysis of your favorite assets. Okay, so technical indicators, MT4 offers 30 built-in technical indicators and 2,000 custom indicators from the free code base, whereas MT5 provides 38 built-in technical indicators to get insight into market direction. So in addition to the free indicators, MT4 also offers over 700 paid ones in the market. So it's definitely enough for market analysis. Okay, for charting tools, MT4 and MT5. MT4 has 31 graphical objects such as lines, channels, the gun, and Fibonacci tools, shapes, and arrows to predict future price movements. MT5, on the other hand, offers us 44 graphical objects, including geometric shapes, channels, gun, Fibonacci, and Elliott tools. Okay, in terms of the types of orders as well, MT4 offers 4 types: buy stop, buy limit, sell stop, and sell limit. MT5 offers 6 types of pending orders. Those offered by MT4, as well as the buy stop limit and the sell stop limit. So we mentioned this earlier as well. So MT4 tends to be recommended for beginners because it's easier and simpler to use compared to MT5. So MT4 is the best platform to trade Forex because it was initially designed for the needs of Forex traders. However, the cons is that MT4 has fewer trading options than MT5 and is a little bit slower. So some pros and cons for MT5. It allows more markets for you to trade, has more charting tools as well, and more time frames. But it can appear to be more complex for beginners, and few robot and EA developers opt for MT5. So if you're wondering which is better, both platforms MT4 and MT5 are popular amongst traders. So in short, if you're new to trading, MT4 is the right choice. The basic functions in MT4 are more than enough for trading. If you already have experience, then you can try MT5 since it has more features. Okay, so top 6 tips for MT4 and MT5. Tip number 1 is to use the MetaTrader Market Scanner. So this is a powerful tool that can help you find trading opportunities because it allows you to scan for specific conditions, such as price movements, technical indicators, and economic events. So you can then use this information to make informed trading decisions. Number 2, create custom indicators. So custom indicators are a great way to tailor your trading experience to your specific needs. You can create indicators that track data points that are important to you, such as support and resistance levels or moving averages. So this can help you make better trading decisions and improve your overall performance. Number 3, use EAs. So EAs are automated trading platforms or programs that can help you to execute the trades. So we mentioned this earlier, but it basically helps you to place your orders, manage your positions, and close your trades automatically. So EAs can take a lot of guesswork out of trading and can be a valuable tool. Number 4, manage your risk. So risk management is a really important part of successful trading. You need to know how much risk you're willing to take on, and you need to set stop losses accordingly. So this will help you to protect your capital and avoid making costly mistakes. Okay, stay disciplined. So discipline is essential for any trader who wants to be successful. You need to have a plan and stick to it. Emotions can cloud your judgment, so it's important to remain calm and focused when trading. Tip number 6, have realistic expectations. So it's important to have realistic expectations because you're not going to make a fortune overnight and you need to be prepared for any losses. So if you keep your expectations in check and focus on long-term success, you'll be more likely to achieve your goals. Okay, so let's get into backtesting. Okay, so what exactly is backtesting? So it's basically the use of historical data to test your strategy. Sorry about this, my throat is acting up because the weather is getting really cold. So backtesting is a crucial process in trading that involves assessing the performance of a trading strategy using historical market data. So it's just a way to evaluate how a particular trading strategy would have performed if it had been applied to past market conditions. So of course, it uses historical data, knows the behavior of your strategy, fix your strategy, and helps you to improve your strategy. So how exactly the process of backtesting is? Let's see if I have the slides here. Okay, these are some things to just watch out for: net profit or loss, volatility measures, averages, exposure, ratios, and annualized return. But the process is typically you start off by formulating a trading strategy that includes specific entry and exit rules. So this strategy can be based on technical indicators, fundamental analysis, quantitative models, or combination of factors that we've mentioned on this slide. Next comes the data selection. So historical market data, such as price and volume data, is collected for the period over which the backtest will be conducted. So the data should cover a representative sample of market conditions, including different market cycles and volatility levels. Next, you then execute your trade. So the trading strategies rules are then applied to the historical data that we mentioned earlier, and then you simulate the execution of trades based on the strategy's signals. So this involves identifying potential trade, entry, and exit points according to the specified rules. Next is then comes in your measurement for the performance of your strategy. So the simulated trades are then tracked. Key performance metrics are calculated, such as profit or loss, win rate, average trade duration, and risk-adjusted returns. So these metrics help to assess the effectiveness and viability of the trading strategy. And then lastly would then be your analysis and optimization. So then traders analyze the results of the backtest to gain insights into the strategy's strengths, weaknesses, and areas for improvement. So they may adjust parameters, modify rules, or explore alternative strategies to enhance performance. Okay, that's just in case you were wondering how exactly you go about backtesting. So here's one of the strategies, tick-by-tick backtesting. So for tick-by-tick backtesting, you would require in-depth data, volume weighted into price, creation of elaborate models, prevent unexpected surprises, and you would need to simulate your trade execution, which is pretty similar to what I've recently mentioned. Okay, common backtesting mistakes. So firstly, you could get an unrealistic backtest result, and that's how you would know. You would either have to repeat your testing, or change a variable, which you would have to analyze. Next, do not overmine your data, because there are a lot of factors that come into play when you are trading. A lot of market conditions that are beyond your control. Next, getting the timing right. As I mentioned earlier, volatility is a big thing that could affect your results. So it's important to get the timing right for your execution of your trades. And lastly, incorrect assumptions. So based off of the results of your backtesting of your trading strategy, then you have a certain number of assumptions that you make off of those results and not based off of whether you think that it's right or wrong. Okay. Okay, that brings us to the end of my slides, but let's go ahead and get started with some charts. So if you have any requests for any charts, feel free to let me know in the chat. One practical trade for backtesting. So most of the backtests are conducted on, excuse me, on any of the majors, typically, especially if you are trading Forex. So be something pretty basic like any of the majors. If you're trading commodities, then perhaps gold. Those are the common ones that are used for backtesting. If you're asking me to show you how to conduct a backtest, I can't do that now because that requires a software or programming language that's specifically designed for backtesting. So I can't exactly run the backtest for you guys to see currently, but if that's something that you are interested in, feel free to let us know and we could do a webinar on that soon. So maybe let's go ahead and analyze one of the majors together first. Okay, let's go ahead and analyze the euro dollar together. Okay, so as per usual, we want to look at the higher time frames first and then do a top-down approach. So we're going to take a look at our higher time frames first, just to get the general direction. So here we can see price moving upwards. That's our general direction on the weekly time frame. And if we take a look at our daily time frame, our general direction is upward as well. Let's see if we have a parallel channel. Okay, no. But we do all agree that prices look like they are heading upwards. I think we have a trend line here. Okay. Okay. Now we typically will do our analysis on either the 4 or 1 hour time frames. So let's go ahead and take a look at that. Okay, so first things first, we want to see if we can identify any trend lines or trend channels. Okay, it doesn't look like there are any trend lines here. Okay, but it does look like price is moving within this ascending trend channel. So for a valid trend channel, just to recap, you want to make sure that there are 2 touches on top and at least 2 touches below. Okay. So now that I've done that, let's go in with our support and resistance levels. So over here would be my first resistance. And you see, I want to pull it back as far as I can without cutting too many candlesticks, just so that I can see how significant this level is. So I've placed it here. I can see that price has tested this level many times in the past. Okay, and then this is my first support. So this is just purely based off of graphical analysis. So purely just swing highs and swing lows that are closest to where current price is. Then we'll go in later with our Fibonacci levels to adjust the levels accordingly if we need to. Okay, and then here is my second resistance. Okay, now that we've done that, let's go in with our Fibonacci levels. So I'm looking for a Fibonacci retracement. So for Fibonacci retracement, we want to look for, we look at 5 specific levels. We look at 23.6, 38.2, 50%, these 5 levels, 61.8 and 78.6. But I can see that my 38.2 lines up nicely with my second support. So I'm just going to go ahead and keep that. Okay, and then I'm going to see if I have another retracement over here. So same thing, I'm going to look at these 5 levels. And I can see 78.6 lines up with my second resistance. Now, even though the 61.8 lines up nicely with my first support, but because price has already broken this level, so we can no longer use it. Okay, whereas in this case, the 78.6 price has yet to retrace back to the second resistance at the 78.6 level. Okay, so now I'm going to look for a retracement. So for retracement, not retracement, sorry, projection. So for projection, we use these 3 levels, 61.8, 78.6, and 100%. And you want to remember when you're looking for a projection, that you want to look for this flash kind of shape, like a Harry Potter lightning bolt kind of shape. Okay, and in this case, I can see my 100% matches nicely with the second support and the 38.2. Okay. Okay, now that we have all of our Fibonacci levels, we can go ahead and include some indicators to support our analysis. So we typically like to use Ichimoku and MACD, and I can see price is moving above the Ichimoku cloud, giving us a bullish bias. MACD, however, is giving us a bearish signal. So I'm going to pull out RSI. Okay, and RSI is giving us this, or rather it's moving in this ascending trend line as well. Yeah. Okay, so I'm going to get rid of that MACD. So we can expect prices to bounce off of this level and head towards our first resistance. But since we can't find any Fibonacci levels to support this level, it's considered a pretty weak level. So we could see it break as well. But I do want to mention that even though we cannot find any Fibonacci levels, this level in itself has 1, 2, 3, 4 currently touches on its all on its own. So this is what we call a overlap support level. So it's a pretty strong level, and we could see price continue to bounce off of the level and continue within this ascending trend channel. Okay, and that's all for Euro USD. I think we have time for one more chart, so feel free to let me know if you have any requests. If not, maybe we'll just go ahead and do the XY, just a commodity instead of, since we've already done a Forex currency. Okay, so same thing, we're going to do a top-down approach. Can see on our DXY prices, this is kind of a downward movement. Okay, on our daily time frame, it's also looking like the general direction is downward, although there is a slight reversal here, but the general direction is still downwards as well. Okay, let's begin our analysis on the 4-hour time frame. Okay, I have this descending trend line, but I want to see if we have a descending trend channel. Okay, we do. So we typically will try and look for channels instead of lines, because trend lines, or rather for trend channels, it's a lot easier to see if there will be a continuation or if there will be a breakout of the trend channel. Okay. So now let's go ahead with our support and resistance levels. Okay, here's my first resistance. So for our first resistance, it's typically the closest swing high to where price currently is at. Conversely, for your support, it will be the closest swing low to where price is at. Okay, and then for the second resistance and support, that really depends on either the graphical analysis or on your Fibonacci levels. Okay, I'm gonna leave the second resistance out first. Here's my second support. Okay. So let's get started with our Fibonacci levels. So same thing, now I'm looking for a retracement. So earlier I mentioned that I will leave my second resistance for later. So this is the reason why. I'm just going to use my Fibonacci to help me. And the reason for that is because for this specific graph, we have a lot of swing highs and swing lows. Okay, here. Okay, so we have a 78.6% that lines up with my second resistance. And my second resistance is significant on its own as well because it is an overlap resistance. Okay, and I can tell my 50% Fibonacci retracement is nicely in line with my first resistance. Okay, now I think I have another retracement here. Okay, yes, my 38.2 lies nicely with my first resistance and the 50%. So this is a major confluence area for us to take note of. Okay. So now let's pull out some indicators once again. Ichimoku, MACD. So prices are moving below the Ichimoku cloud on our Ichimoku indicator, giving us a bearish signal. On our MACD, it's giving us a bullish signal. So same thing, I'm going to pull out RSI. Okay, RSI isn't really telling us much. So I'm going to pull up stochastic. Okay. So for our stochastic, price, you can see price has made a lower high on our price chart, whereas on our stochastic, price has made a higher high. So this actually suggests that there could be upward pressure pushing price upwards. Okay, but we would have to be careful because of this major confluence area with the 38.2 and the 50%. And this first resistance is also a double swing high. Okay. Oh, it's actually an overlap as well. So because of all of these factors, it's a confluence area. So we could see price reversing off of it, or we could see price pushing forward, that's suggested on our stochastic, pushing up to our second resistance, and maybe not up to our second resistance actually. Let me just because price is moving in this descending trend channel, we could see price break out of the first resistance, but still rebound off of the descending trend channel, because there is still a lot of downward pressure, since on our weekly and our daily timeframes, it gave us a general downward movement. Okay, so we have to be careful with this one. And yeah, I think that's all the time we have for today. But we still have a few minutes. So before I end, feel free to let me know in the chat if you have any other questions. Yeah, if not, you can feel free to leave the room. Thank you guys so much for joining today. Hope you guys have a great rest of your week, and I'll see you guys next week. Bye.